Hello and good morning. I welcome you to the morning meeting today on Wednesday, the 31st of January 2018. This is Jens Klatt speaking, exclusively presenting this format to you for JFD Brokers as their global head of research and education. So we want to have a look at the markets before the Fed here in the evening. Even though I have to admit that I don't think, as many others too, that there will be so much in terms of information tonight. I don't think that the Fed will deliver anything new. It will be the same rhetoric used as 6 weeks before in December. There won't be a rate hike, even though there will be several, or at least the market expects several rate hikes here to come in the upcoming months here, minimum 2, by the way, if you look at the Fed Watch tool, what we will do. So the thing is that this is probably a reason why the DAX doesn't show that much volatility today, even though I consider the price action to be kind of interesting, at least. So in fact, if you carefully watch the price action from yesterday, first of all, let's have a look here what happened yesterday. So we pushed lower after closing a gap, and we attacked the region around 13,150 points, the region around 13,200 points. The market made new weekly lows here. I'm sorry, not new weekly lows. Yes, it's also true, but we pushed below the lows from last week too. That's what I want to say. As you can see here, we make lower lows, and those are not confirmed anymore in the 14 RSI. So we have a first tendency towards a bullish divergence here against a very significant and crucial support level around 130, 150 points. But now things are getting interesting, even though this indicates some bullishness probably for the next hours at least. Everything below 13,400 points should be considered bearish, or at least neutral to bearish. And there is all the time a chance that we get to see a more significant push and attack of this region around 130, 150 points here. And if we make it below that level, things are getting really interesting, meaning even though before the Fed I don't consider aggressive engagements here, don't think that there's so much potential for big volatility, there is at least a chance that we get to see another push towards these lows. And if this really happens, then I definitely would give it a try here and try to profit from break below that level, since I consider risk reward here on the downside to be really attractive for short engagements. If someone from the German audience now, where I held the morning meeting around 45 minutes ago, or respectively, it's not 45 minutes ago, in fact it's only 15 minutes ago, since I ended the event here, but I was talking about the DAX here 45 minutes ago. I was kind of positive, at least, also based on this bearish divergence, and as you can see here, this is a 5-minute chart, so the DAX was already trading lower from the intraday highs, even though it was trading at a very interesting level here. As you can see, we are trading around the high of the open range. That was around 13,232. That was a low here, a swing low, which was built yesterday in the afternoon, or evening especially, afternoon, evening. And as you can see here, we are also trading against the exponential moving average 50 on a 5-minute time frame, which has acted as a support, respectively resistance line, quite often in the past. And so against this level, I said, well, with the the bullish divergence here forming on the hourly chart, probably it's worth to give it at least a small try. So reduce position size, going long against this level with a stop below the intraday lows here, and aiming on another attack around 13,270 points, potential break above that level, and then a breakthrough towards and above 13,300 points here, so that at least on an intraday basis the bulls are in charge of the action. And now with the market breaking back below the 50 exponential moving average, effectively breaking back into the open range here, things start to change. So it's not that I'm overly confident that there will be a significant push on the downside in the next minutes. That's something, or next hours. That's something where I say the probability for that is probably significantly less than 50%. But I nevertheless doubt that there's so much more potential on the upside here. Now, after the market making it back below the 50 exponential moving average here, so price action is similar to what we've seen yesterday. Even though we started significantly below with the gap lower here, you may remember the Asian markets which were under pressure overnight, but we made it back above that level and closed this gap, and then we fell back below the level and we weren't capable of making it back above the 50 exponential moving average. And so with this in mind, with seeing the euro stabilizing at an elevated level significantly above 124 here, I somehow doubt that there's so much potential for the DAX on the upside anymore for the upcoming minutes and hours. And we also have to see that here US equity markets are probably not yet done on the downside. So yesterday we were capable of holding above 26,000, and in fact, again, it's a close call, I think. But what I really it's not that it one second please. It's not that it really disturbs me or so, but it's like you somehow have the feeling that the market is turning aggressively bearish right now based on the first 1% drop since, or bigger than 1% drop in the Dow Jones and S&P since I think 112 days or so. And so the market gets overly skeptical, and this is something, I mean, you get this feeling when, for example, scrolling through Twitter and reading through the headlines. And this is something where I say, well, I doubt that then there's so much further potential on the downside. Could imagine the US equity markets probably stabilize on that, even though currently also here with the spike in yields in the US yields spiking, 10-year yields spiking above 2.5%, significantly above that, above 2.7 if I remember that right. So this is definitely something which is not overly bullish for equities, but the sentiment starts to turn too bearish too fast, I think. And this is something where I have some doubts, really, to be honest. I'm a little skeptical if there's really so much more potential on the downside, even though, again, we are probably not yet done. So there's still some room for bearish action, even though before the Fed it seems a little unlikely. If such a push lower happens, then I think that there's also a chance in the DAX that we can make it to this level again. And again, it could turn out to be very, very bearish, because if we break below 150, then there's at least further room of 150 points toward 13,000, if not lower than that, towards the region around 12,800, 12,700 points. I'm not saying that we have a chance to get to see this today, but if we break below that level, probably a push here lower is induced by the Fed tonight for whatever reason. I think it could at least turn out to be a really, really bearish weekly close. The question is, if it happens, does it coincide here with risk aversion in the market? That's also something you can see this, but nevertheless, it's not that you say, hey, that looks really as the big deal here. Or the real deal, let's say. So therefore, I mean, we can see that the yen, for example, was stronger yesterday, pushed towards the lows here around 108 again in the dollar Japanese yen, but wasn't capable of making it through. The same is true for a dollar Swiss franc, for example. So Swiss franc also currently quite strong. Nevertheless, it's not that you get to see strong momentum taking on here as we took on last week, even though it was mainly due to the US dollar weakness. And with this in mind, you really, I mean, it's at least it's also a close call, but there's a chance that probably markets can stabilize right now, and we shouldn't be too optimistic in terms of a bearish action in the days to come, even though it's possible, especially if yields keep on rising higher. There are also some data out tonight. It's not just the Fed, or today in general. It's in the afternoon. It's the ADP data set in the US. It's tomorrow the ISM manufacturing. We have NFPs on Friday. So there are several indicators and economic indicators which could probably induce some kind of volatility, at least in the currency markets. But then, well, we know that, for example, here, in the Euro USD and US dollar in general, there's probably some potential that if we get to see an impulse here, then this might also show itself then in the DAX in this case. So meaning good news, for example, good economic indicators, good NFPs, good ADP data. All this is probably capable of at least inducing a small corrective move in the US dollar. This could probably push the euro a little lower from here, and then this could also be kind of stabilizing, respectively short-term bullish probably for the DAX. But all in all, it's not that you really have the feeling that there's, first of all, lots of volatility to come, and also that there's a risk aversion really taking place right now and gaining momentum, which is capable of really aggressively, for example, pushing the Dow Jones below 26,000, or also pushing the DAX lower. On the other hand, there's also something which should also be noted here. I mean, if it happens, it probably happens coincidentally, let's say. But if it really happens, then there's a big move lower. Again, nevertheless, the question is it really risk aversion or not? This could be really interesting because it's a question about sustainability. So meaning, if there's no real risk aversion if it's not risk aversion driven, well, this could mean that it's only a fake out below this level, probably a more aggressive fake out, but nevertheless you probably get a good possibility to position yourself aggressively long in such a spike lower. Now let's see. I mean, if it's risk aversion or not, you can also, or most of the time, see it here when looking at the Japanese yen. I consider, and that's also something, I mean, we're talking about dollar yen. That's mainly due to the fact that dollar Japanese yen is one of the most traded currency pairs in the world, most liquid currency pairs in the world. But my personal favorite still, from a seasonal perspective, is Canadian dollar Japanese yen. Also because there are some indicators today which will be published from the Canadians around the GDP, for example. We know that there is some speculation going on that there might be further rate hikes of the Bank of Canada. Simple calculation. If GDP data today at 1:30 p.m. GMT beats, well, that's potentially bullish for CAT, since the BOC is more likely to hike rates at their next meeting again. On top of that, we have this bullish seasonal pattern, and also the market is starting to bottom out here somehow. And if you go down in the time frame on the hourly chart, what you can also see is that the market now has broken this sequence of falling highs and falling lows. There we go. As you can see here, so the market now really pushing aggressively higher, having broken this level here, and so the next target can be found somewhere around 88.90, 88.80, 88.90. This is probably the key level to watch here. Then in the afternoon, if we break above that level, there's some further room in the upcoming days. And in fact, you can see probably also based on a still positive development in the crude oil prices, for example, Brent oil prices also. All this is definitely possible, or giving us the chance that we rather sooner or later make it above that level, which I already interpreted as a potential bullish catalyst. If we can make it from here now, taking on momentum from here and make it above 89.60, that's a potential driver then for at least an attack in the upcoming days to weeks here of the region of around 91.60, probably push above that level, which makes gives us room up to 93. And so Canadian dollar, Japanese yen is definitely one of my favorite currency pairs right now, and definitely interesting to watch also today already with the GDP data out there. And probably, well, the price action is not lying here, and we are about to see a bottom. Things would definitely turn sour once we break below 86.70, that's for sure. But right here, well, it looks interesting. At least it looks interesting, and probably even more interesting than in dollar Japanese yen or in the dollar pairs in general, since we can't be really sure how things develop here around the Trump administration and their willingness to really talk down the US dollar, keep on talking it down. By the way, while I mentioned the Trump administration, also something worth noting in terms of Canadian dollar crosses, not just Canadian dollar Japanese yen, but all CAD crosses, it's the NAFTA negotiations. At the moment something comes out there which is positive for the Canadian economy, this is definitely a potential bullish catalyst here for all CAD crosses, and also something to note, especially in terms of CAD yen, and in this case. By the way, also noteworthy, all this sounds fantastic, and it's like a done deal. It seems to be a done deal, CAD against Japanese yen, for example, long then. But the thing is, the moment risk aversion hits, the moment the market really, and this is what I was talking about when looking at a potential break and at 13,130, 150 in the DAX here. The interesting thing is, if this goes hand in hand with risk aversion, you might see Japanese yen outperform on a broad scale, even though there might be a fundamental advantage here. And Canadian dollar against the Japanese yen currently doesn't necessarily mean that this plays out, because risk aversion will result in market participants unwinding carry trades, and this usually triggers bullish action then in Japanese yen, but also in the Swiss franc, for example. So this is definitely something you have to take care of, and keep this in mind when entering positions here in such currency pairs, respectively. Currently going, in this case, short the Japanese yen. You have to probably cover these shorts as soon as possible once risk aversion hits. Yeah, so that's it then on CAD yen. DAX not very spectacular. British pound USD, again, let's say, I still favor another push below 140 towards 139.50, against which I could consider long engagements in GBP or pound sterling against the US dollar. So right now we don't see much of fundamental drivers here being a reason for the current volatility. This is also true for yesterday's action, which was interesting. So we pushed below 140 and then pushed back over the next hours of trading above 142, now falling back below 142. So all in all, I really prefer, if I want to go long pound sterling against US dollar, I prefer a push towards 139.50 against these highs, where I could and would probably consider long engagements against. Gold, also very interesting. Gold is interesting because we've seen another push lower yesterday, but now today taking off again. It's not that we're super bullish, but with the Fed around the corner, gold is definitely worth a more detailed look here. So as long on an hourly chart here, as long as we trade above 1,325, 325 here, gold should be considered bullish. This is the region for potential long engagements. We've now seen another retest yesterday of this region, market taking off from there. I think a clear confirmation can be found once we make it above 349, so 1,349. If we make it above that level, gold is definitely considered bullish and good for another push towards the current yearly highs around 1,366, and even above that level, targeting 1,400 USD then, or aiming for. This is a potential target on the upside I'd look for. And yeah, so in fact that's it. So crude oil, not so spectacular. Yesterday there was a sharp drop, even though everything above 62.50 here on the downside should be considered long, and with good potential for another attack of region 66.50 here, probably push above that. gives us room up to 70 USD per barrel. Also something which would be interesting, especially when looking back at my thoughts around Canadian dollar, Japanese yen. So Canadian dollar usually profits from WTI, even though this correlation, this positive correlation, is not necessarily given all the time. It's not sad that if WTI crude oil here rises, that this means CAD has to rise too. That's not sad, but nevertheless, it's potentially giving some at least support, let's say. Yeah, and so that's it from my end. So I wish you happy trading. Watch your stops. Talk to you again then tomorrow, 10:30 a.m. GMT. I definitely look forward to it. Have a nice trading day. Happy trading. Watch your stops and talk to you again tomorrow. Take care. See you and bye bye.